Welcome back to Investing Talk Podcast.
Today we're looking at American Battery Technology Co.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. American Battery Technology Co.
Yeah.
Because, well, we have a stack of sources here detailing what looks like a really remarkable operational and financial pivot over the last year.
Yeah, it's not just a minor tweak, is it? It feels like they've fundamentally repositioned themselves.
Completely. And when you look at the financials, the first thing that jumps out is how they've de-risked the balance sheet.
Right. That financial housekeeping. Super important for a growth company.
They managed to completely wipe out all their outstanding debt and the convertible notes.
That move with the convertible notes?
Yeah.
That's massive. We should probably underline why that matters so much.
Well, yeah, because those notes, they're basically ticking time bombs for shareholders, right? Often means sudden dilution down the road. So getting rid of them means the path forward is just cleaner. Shareholders can breathe a bit easier knowing their slice of the pie is, well, safer.
Exactly. Cleared the deck. And part of how they did that was having a pretty strong cash position to begin with.
They reported, $55.6 million in cash back in early November 2025.
Yeah, and having that kind of liquidity, especially without short-term debt hanging over them, that's a vital buffer for all the construction and development they need to do.
But it's not just about what they don't owe anymore. It's what they're actually starting to earn. The revenue figures are, frankly, eye-opening.
You mean that 1,149% annual growth rate for fiscal 2025?
Yeah, that's the one. A quadruple-digit leap. It sounds almost unreal.
Let's put some numbers on it for you. Revenue went from just, $343,500 in 2024?
To $4.29 million in 2025, and the latest quarter showed it's still accelerating 183% quarter-over-quarter growth.
Wow.
And this growth, it's clearly coming from getting their dual strategy online, battery mineral manufacturing, and their recycling operations.
Which means the market is starting to, pay attention.
We saw that formal recognition back in June 2025, right, when they got added to the Russell 2000 index.
And that's not just for show. Getting into a major index like that usually forces index funds, big institutional players, to buy the stock.
Increases ownership, stability, liquidity. It's real institutional validation.
Okay, so clean balance sheet, good cash pile, hyper-growth revenue.
Yeah.
But the real long-term story, the potential, it's in the ground, right? And their tech.
Exactly. We have to talk about their strategic assets, specifically the Tonopah Flats Lithium Project, TFLP.
All right, let's unpack TFLP. This is where the jargon can get a bit thick, but the implications are huge. They just published those key documents in October 2025.
The SK1300 technical report and the pre-feasibility study.
And that SK1300, that's the standard the SEC requires, right?
Yeah.
It's not just the company saying, we think we have this much.
It's the gold standard for proving up mining reserves for investors. And the proof, well, it seems to be there. The study showed some really robust economics.
Like that after-tax net present value, the NPV. $2.57 billion.
Yeah, $2.57 billion. And for anyone less familiar, NPV is basically the total current estimated value of all the future cash the project is expected to generate after you account for all the costs and the time value of money.
It's a serious number. And they also reported an IRR, internal rate of return, of 21.8%.
Right. And the IRR tells you the anticipated rate of return on the investment itself. It's a measure of profitability. 21.8% on a project this size, that's definitely attractive.
But maybe the most important number in that whole report was the actual reserve size.
The 2.73 million tons of proven and probable lithium reserves.
2.73 million tons. That instantly makes TFLP a major player, like one of the most significant domestic U.S. lithium resources.
And that scale, plus how critical lithium is,
Yeah.
That's why they have this huge competitive advantage from government support.
Yeah, it's fascinating how the government sees this. It's not just another mine, it's strategic, it's national importance. TFLP got that federal FAST 41 priority status.
Which is a massive accelerator. FAST T41 basically puts them on the fast track for federal permits.
Cuts through years of red tape. It signals the government wants this lithium. Like yesterday. Secure the U.S. supply chain.
And that government seal of approval translates directly into money, into capital. They've already secured $58 million in DOE grants.
Department of Energy.
And maybe even bigger, that $900 million letter of intent, the LOI,
Yeah.
from the Export-Import Bank for project financing.
That $900 million LOI, That is probably the most critical piece of financial news here. It's essentially a roadmap for funding the huge construction costs.
Right. It insulates them from some of the usual pain points similar companies face, like having to constantly sell more stock or chase venture capital just to build the thing.
Exactly. And linking this back, they aren't just a mining company. This goes back to that unique moat you mentioned. They've got that closed-loop recovery facility in Nevada, too.
Absolutely. The recycling angle is crucial. Because if you're only a miner, you're totally exposed to lithium price swings, which can be brutal.
By doing recycling, too, they create this closed loop. They capture value from old batteries, and they become this one-stop shop for the big manufacturers, the OEMs.
Who desperately need secure domestic sources for both new lithium and recycled materials.
It's a smart setup. Fundamentally de-risks the whole operation and makes them super attractive to the big auto companies.
Okay, so let's pivot to the immediate future. This is where it gets really interesting if you're watching the stock closely over the next, say, 3 months, November 25 through February 26. The calendar looks packed.
Yeah, catalysts galore. Top of the list have to be the earnings releases, right? Q2 and Q3 for fiscal 2026, November 15th and February 18th.
Right. The past growth was amazing, but now investors want to see if it's sustainable. And critically, are they controlling costs? You can't keep growing revenue at 1,100% if your costs are growing even faster.
Good point. Then there are the index flow events, too. December's got the big ETF rebalancing, including the Russell 2000 again.
And then in January, we get the institutional 13F filings.
Which is when the big money managers, the ones handling over $100 million, have to report what they've been buying and selling.
Seeing big funds increase their stakes is always a strong signal of confidence. Tends to stabilize the stock price, too.
And beyond the financials, maybe the biggest operational catalyst is permitting.
Definitely. They've submitted all the baseline studies for Tonopah Flats permits and also for the EPA recycling contracts. Getting that final federal green light in the next quarter, that could be the single biggest inflection point.
Taking them from a development story to like a real pre-production infrastructure project.
Which naturally leads us into the rumor mill. The highly speculative stuff, but the kind of chatter that can really move a stock.
Okay, so what's the buzz? What's the big rumor?
Well, the M&A talk just won't go away. There's constant buzz about a potential strategic partnership or maybe even an outright acquisition.
By who? A major car company. Battery maker.
Either or both. They're all under immense pressure to lock down their U.S. lithium supply. And buying a company that solves both the mining and the recycling problem in one go, that's got to be tempting.
Makes total sense given their setup. What else?
Also hearing whispers about finalizing major long-term offtake deals.
Offtake agreements.
Yeah.
So, guaranteed contracts to sell their future lithium production.
Exactly. If they announce a big contract with a top-tier manufacturer, that basically validates the whole TFLP project's economics. It provides security for that $900 million LOI, too.
Okay. And anything else on the rumor front?
Just maybe more DOE money. They've got grants already, but there's some speculation about potential expansion of those grants to boost facilities or research. More government backing, basically.
Right. So, undeniable strategic position, crazy growth, strong government support. But it's still a pre-production story, right? High stakes. We need to look at the risks, too.
We absolutely do. This is where you have to be critical. That revenue growth is great, but they're still burning through cash.
The trailing 12-month operating loss, around $45 million. That's a significant burn rate.
It is, but, you have to keep it in perspective. That kind of loss is pretty typical, almost expected, for companies building out huge projects. They're investing heavily.
Sure, but it highlights the massive execution risk here.
Exactly. That's the #1 risk. Making the leap from a pilot facility and a promising study to a multi-billion-dollar commercial operation, that's incredibly hard.
Can this management team actually pull off that massive scale-up? That's really the core question.
It is. And related to that, even with the cash they have now, if that $900 million LOI hits a snag or future contracts don't materialize as planned,
then they might need to raise more money by selling stock, right? Which means more dilution risk for current shareholders.
Always a possibility with negative operating cash flow, funding huge capital needs. And we should probably briefly touch on the legal issue, too.
Oh, right, that pending appeal.
Yeah.
Related to a $52 million dispute.
Yeah. Seems manageable, but any legal cloud that could impact future finances is worth keeping an eye on.
Okay, so putting it all together, the growth, the assets, the backing versus the execution risk, the cash burn.
Yeah.
What's the overall view? What are analysts saying?
Analysts seem overwhelmingly bullish, actually. The consensus forecasts show pretty significant upside, Average 12-month price targets are landing somewhere between $7.30 and $9.10, roughly.
Which, depending on where the stock is trading now, implies potential gains of, what, 60% to over 100%.
Something like that. And the market's technical picture seems to agree lately. The stock doubled over the past month, right? Spiked on the funding and permit news.
Yeah, technical analysis is showing renewed bullish momentum. Looks like institutions are accumulating.
So if you boil down the overall thesis, it definitely leans bullish. I'd say maybe an 8 out of 10, primarily because that strategic foundation seems so solid.
The two-pronged approach, recycling and mining, backed heavily by the government, offering that clearer path to funding and customers.
Exactly. Their position in the U.S. battery supply chain, plus those strong near-term catalyst permits, contracts, financing, it makes for a compelling high-reward story, even with the risks.
That really frames it perfectly. It highlights the high-stakes, almost binary nature of this investment. So the core question for you, the listener, really boils down to execution. Can American Battery Technology Co. successfully navigate that incredibly complex transition from being a high-growth startup with a promising project to becoming a real commercial cornerstone of the U.S. clean energy supply chain? Their ability to bridge that huge gap from $4 million in revenue to realizing that $2.5 billion NPV potential, well, that's what will determine if this stock truly takes off.